So what I intend to do this morning is run through this presentation fairly quickly and spend more time on the actual tool. So we will not be spending lots of PowerPointing, we will be spending a little bit more time on the web page and how to make use of that easily. By the way, my name is Ash, and I've been doing this for a while now. This is not my primary job. Most of my life I'm doing engineering, so I work for TI, and we, as in my team, designs electronics for self-driving cars. So that's what we do most of the time. Okay, and you'll be surprised, as I was about 5 years ago, that the same strategies and algorithms and artificial intelligence and deep learning and all the other buzzwords and synonyms that you see for exactly the same concept in media, because they have to invent new words to capture our attention. Those same concepts are applicable in driving a car autonomously or taking a good finance decision. Not too far different. And I kind of thought that let's start with some results. So for next 1 minute you'll see some big numbers flashing. But the reason I wanted to put those numbers there is it helps you orient yourself with how your trades or my trades look like. Okay. And then we will go into how we make this happen. So what you're going to see is something like this. So this will just keep flashing. Don't worry too much about it. So this is from June, probably. That's when I started building this PowerPoint, because I got in touch with Mo and said, I want to discuss this with good folks in the room. And he said, okay, so first thing you need is a PowerPoint. So I started building that PowerPoint. So what these things are is basically for these stickers that you keep flashing, when did the information, and we'll go a little bit deeper into what the information means, came up, and when was the sell target achieved. And I just picked stuff where the sell target was more than 100%. So you invested $100 and you came out with 200. So that's what the percentage gain means. And so these are a bunch there. The other objective of this thing is, so you can see all these big numbers. So why am I not a billionaire yet? Okay. Because you don't know when you are going to be right and when you are going to be wrong, right? You know, all you can play is, if you go with a certain algorithm or a certain strategy, what's your expected gain of the system? Because you will lose. Okay, I might as well list as many losses. But the fact is that if there is a strategy which you can use, whether it's one of the 78 strategies that Ruth was talking about, or whether it's you pick some stocks or buy anything, if your expected gain is positive, you need to know how much that positive is going to be and how much risk are you willing to take to make those expected gains. Okay. Now I've been building it for, so I thought that it might make sense to show this for a small account, because depending upon how much money is in your account, you will use different strategies, and so I thought it will be most relevant if we pick a small account, and I built that account over last 5 months. I think I opened this account just for this purpose in May of this year, May 1st. And what you're going to, oh, this has not come up. So what you're going to see is, this is basically May 1st. That's when I put 25K here in my account, slightly less. I kept adding it, but let's go with 25. And I just kept tracking it over last 4 or 5 months. So it shows 57% gain. When I took this snapshot, it has been down a little bit in last 1 week, as you all know, the trades are a little bit not. So it's possible to do that. I don't think you can do that all the time, okay? Because the intention is for people who want to test the waters with small accounts using these strategies. They can actually look at the account, a particular account that's doing those live trades, And if you say, okay, I don't understand anything about AI, can I just follow this account? You can do that. Or you fall in another bucket where you are a math wizard and say, oh, I can do much better than you do using these strategies. I can mix and match your strategies. Okay, I can make much better decisions on the baseline information that's on the web page. Sure, you can go right ahead and do it. And I know at least 2 people who have doubled their account in the same time period. They are much better traders than I am. They are probably not as good at programming, but they are much better than me at trading.
Was this strictly AI, the numbers you're showing, or you were doing some active trading?
So AI tells me what to trade.
Okay.
I make the trades. Okay? So that's what it is. So AI tells me, and we'll go a little bit deeper into what AI tells us. Okay. But you do the trades still. Eventually, my objective is to make this whole thing totally automated. But that's somewhere out in the future. But it will happen. It's not too hard to do, given all the compute power available. So, okay, let me just. So these are the things that we will try to hit. I don't know how many we can go through today. We'll try to take them through. But first we will invest some time on what we are doing in Profit Monk, how it started, why we did it, why I did it. The problem that I'm trying to solve, what's the magic, and I did this mock with Russ and Mo about a month and a half ago, right? And so there are 2 parts to it. One is how to use the tool, and the second is how the tool works. Now, it's way more interesting to try and understand how a thing works when you find it useful. Okay, otherwise it's theory.
Yeah.
Therefore, we would spend a little bit more time on what it is about, how is it useful, and then see if we have time left for the algorithmic part of it. If we have, we'll surely go into it, and the meetings, we meet every month, so that's fine. And I like the education part of it, because even through building this presentation and working through many people on the reviews, actually I have changed my web page a lot due to the feedback, so that always helps. We will actually review example trades, but more than that, we will hit the questions of when to buy, which is easy, when to sell, which is slightly harder, at what point to sell, and what are the decisions and choices about. I use the word option strategies here. Mostly we will be talking about buying calls. Okay. There is an example where I have used Mo's strategy, Golden Goose, so I just put that example in there, because if I had just bought the call, it was way too expensive. So I went for Golden Goose, it worked. So you may use that for things which are uber expensive, but most of the times we will be discussing buying long calls. That's it today.
So you have to know all the strategies yourself, and then the AI helps, or do you have to know any of the strategies, like a beginner?
So like a beginner, what you will get is something in your mailbox or phone which will say, buy this long call at this price target, and this is your sell target.
So
and
all
that's
these
all.
has its own cost.
Or you would recommend
Only long
on a
calls.
daily
Only
basis?
long calls.
Only long calls. So the web page as a beginner will only tell you about long calls. It will not talk about butterflies.
The actual strategy itself, it just
Yes.
recommends certain things.
Yes. So the magic is just finding which call to buy for which ticker. That's it.
So you don't know what strategy it's using behind the scenes, or you do.
So we use this word strategy in 2 senses. One is which option strategy to use, as in what is the straddle triangle, or which options to buy and how long they are expiring, and so on and so forth. So that's one way to use strategy. The other meaning of strategy. So it is what's the algorithm that is making the decision, right? So we'll talk about that.
Programmers are
Right. So yeah, probably we should find 2 different names for that, as I can see that it may cause some
I'll ask
confusion.
specific questions after that.
Yes, as we go through it. But yes, so what the AI does is it has right now I think 9 or 10 different
Like
strategies.
78 he put, we don't have to know.
No, you don't have to know any of those. Okay, you have a list. And the option strategy that you use is always a long call for any of those algorithms. Okay, so you don't play too much with that. If you are an experienced trader, then it opens up a lot more avenues of investing.
That's on you.
That's on you.
Right.
Okay.
Right. Like you say, well, it's a long call, but I might want to also sell a put.
Sure.
Yeah.
Go right in, and you'll make
Yeah.
much more money for sure
Yeah.
if you do that. If you are a big account, yeah, sure. Or if something is way too expensive, but you really think it's going to go up, okay, like everybody seems to think like that about Tesla all the time. Whenever it comes down, oh my God, tomorrow Saudi Arabia is going to buy it and it's going to be 40% up. Okay, so you are in that boat. Sure. But if you try and buy a long call on that, it's going to cost a lot of money. Right? So then you pick a strategy that you have a bullish bias, but then you go with a strategy where you don't risk so much, but your returns are reasonable. You can still double your money if you wish, or lose it all.
Do you get recommendations every day or week?
Yeah, every day.
You might mention how you look at the price charts. You look at so many candles. So he guarantees he's looking at an uptrending stock.
Yeah.
So, it's got to be moving in the right direction before it alerts him to a valid trade.
Yes, and we'll go into that when we look at the webpage, what the actual strategy is. It has to be trending. So the idea is that we basically give clarity. It's a totally confusing business. Okay, there are a million options for us to make a decision. It's hard to achieve clarity. That's what I'm trying to do, even for myself. That's why I started it. Okay, because I've been trading for 7-8 years, mostly as an unsuccessful trader in the first 5 years of my trading life. Reasonably successful in last couple of years, and for first 5 years I blame you, Mo.
Oh.
Because you didn't teach me enough. I learned about options from Mo in 2012 or something, and then I thought, oh my God, this is it. I have to go do it, and it was up and down before I kind of figured it a little bit out for myself. But
that is the mark.
thanks for that, Mo. No, not the losses, but the teachings. So.
Or you could blame Trump for this success.
Thank you. Thank you.
So
It's always Trump's fault.
So when I'm going, even today, so even when I'm successful, we are trying to, if we try a little bit into psychology of this, if my last few days or last few weeks have been uber successful, I find myself making more risky decisions. I can see myself making risky decisions. So that's all psychology, irrespective of what AI tells you and AI asks you to do. If you have had 4 successful trades and you are a math wizard, you know the 5th trade has nothing to do with the last 4. You will still make a riskier bet. Okay, so that's just human psychology, nothing there. And that's where AI helps a little bit, because it keeps you in check when you're going to make those risky decisions and gives you, no, this is what you should do. Okay, the expected gains are different. So the idea is to provide clarity. So now, what does the platform do? Let's go there. I think this will start clarifying stuff faster. So it accesses every day, end of the day options and stock trading data from Opera. Opera is Options Pricing Reporting Authority. It's a government regulatory agency.
It's not Winfrey.
What's that?
It's not Winfrey.
No. So you buy data. No, it's not. So buy
Includes
the.
all the indexes like NASDAQ, everything.
It has data for every stock that is traded on CBOE, option that is traded on CBOE, and every stock that's traded in any stock exchange in US.
Every optionable stock.
Yeah, every optionable stock. If there are no options, you don't
Okay.
have that. So the algorithm downloads this data every day. So you can imagine it's a bunch of data, because it's all the option chains for all the stocks which are optionable, right? So it's roughly 5,000, sometimes less. Then the next thing, we only pick 1,000 of these. The exact number is 957 actually yesterday. But the reason you pick those things are because they are liquid, right? And their market cap is reasonable. It's not a penny stock, right? So it's about 2 billion of market cap, and then you try and identify long call opportunities in each of these possibilities. We will talk, there are some big words jumping here like multi-dimensional feature matching and algorithms. We will talk about that later. But those are the way algorithms are built. Those are the things that the algorithms use to do that actual filtering and come up with recommendations or information or trades that I'm going to do. Now, on each of these opportunities, which are nothing but long calls.
That's a question. Yeah, okay, so I'm kind of new at the whole option trading, but if I think you said earlier that gets, there could be a lot larger profit in gets than in calls, in puts.
In shorting the puts while buying the calls.
So why is it, and I've also heard that they can be safer, like if you're not promising to, I'm trying to remember, is gets where you are going to buy something in the future, and then puts are where you're going to sell something in the future?
So it's called calls and puts. So call is an option where you basically, if you choose to buy a call, then you pay a premium to the seller of that call. And the reason you pay the premium is because that seller is committing to sell you the stock at a given price. It doesn't matter. If the price goes up, you make money on calls. If the price goes down, you make money on puts if you are an option buyer.
Yeah, so okay, right. So my main question is, if there's a larger profit in puts, then, and if it's safer in some cases, then why are we focused in the software on the calls?
Very good question. So, number one, we have to look at it from two perspectives. Number one, buying an option versus selling. What's the risk profile of each? And what's the margin requirement for each? If you buy something, you have paid the premium. It's like buying insurance. Okay, you paid the premium. If something goes wrong, you get whatever the insurance is bound to pay. It's the same here. So you buy a call, and your risk is defined exactly at that moment. If you have spent $500 to buy a call or buy a put, that's all you're going to lose. You're not going to lose more. So that's the risk profile of buying a call or put, and it's similar. Okay, it doesn't matter which option you buy, is the same. If you sell it, effectively, if you sell a call, you can lose infinite amount of money, right? Because the stock may go up to $1 million, and today you bought it for $1 million, and so on. So theoretically, okay, but practically, you need to have 25-30% margins for every option you sell, right? Is that okay? So about 25% margin. So basically, if you decide to sell Apple, easy, okay, $200, you sell a contract, $20,000 worth of contract, you need to have $5,000 in your account before the brokerage will allow you to sell. Or you have to use the strategies that Russ is going to talk about more, and he keeps talking about, so where you kind of spread. So now why we are focused on calls? Because these are all bullish strategies. You buy calls when you find a bullish bias. You think, or the AI thinks in this case, I don't think. The AI thinks that the stock charts, for whatever reason, has a bullish bias. It only makes sense to buy call and sell put at that moment. If you buy a put, you're not going to make any money. Okay?
Yeah.
Alright, so coming back to this, so you identify the buy target, the sell target, and the call option to go on. It also tells you, using the same strategy in last 2 years roughly, what was the expected profit of those trades. So because it's not just that the strategies come up online today, it's been there for last 2 years. Well, it's been there for a long time, but we have data for last 2 years on the web page. So if you have made 1,000 such trades in last 2 years using that particular algorithm, then what's the expected gain for each of those trades? And that gives you a certain idea of what's the expected gain of this trade that you're going to make. And then the fun is mostly here, that it allows you as a user to customize, to control, to change things around, to play with it, tune your view of the platform, pick and choose the strategies, adjust your trading strategies. And actually I can see that many traders who are on the platform. There are about 40 people on this, and I can at least count 5 of them who are way more creative than the other bunch. And some of that creativity is not very useful. But I talked about 2 guys who actually made much more money than I could. So, sure, kudos to them. So what problems does it solve for us as option traders? It enables access to unique algorithmic option trading strategies. Typically hedge funds use them all the time, and they do it automated, by the way. Even some of my personal trades are automated because I don't spend a lot of time trading. I spend a lot of time coding. I do all of my trading in an automated fashion. I don't want you to take that risk or do all that stuff because you need to have lots of checks and balances there. You can't make afford to make big mistakes in automated trades. But the problem that it solves for an average trader with a small account is it enables access to those algorithms to everybody, while giving you a total understanding of what's the possible risk, big reward, small risk, small reward. Right? So, based on historical probabilities of those trades, the key thing and the third part, it's very important. At least for me personally, it's very important. I do not have time because I travel. I'm not in the same time zone. I'm solving a much more interesting problem. Whatever. I'm spending time with my son playing tennis. For whatever reason, I do not have time personally in my life cycle today to invest more than 10-15 minutes of trading. So I do not have time to research. I do not have time to read the newsletters and so on and so forth. So the view is that you have to finish, or I have to finish all my trades in 10 to 15 minutes every day. That's it. I buy, I sell, go out, never look at it again. Now, if you go that way, you can make money in using some different methods, and all those things are coming together, at least here for me. Better research. I'm not actually underplaying research. If you research well, I think you can make much more money, and you can make much more focused trades. Like Fred Richards. Somebody was talking about Fred Richards. If you go to Fred Richards and say, "Oh, I'm going to give you 100 trades in the next 1 month," you'll say, "Okay, out of the room. I will make 10 trades a quarter." That's Fred Richards' view. Why is that? Because he has done so much research, and his capital account starts with a capital V, probably. Okay, so different account size, different restrictions, different objectives. But if you do your research, great. I think you should if you want to make great trades. For somebody like me who cannot do that research that well because I don't have time, I go with AI. And then you get all this stuff on daily tracking and history of the trades and so on. So AI, okay, so it was very hard for me to pick a picture which looks like a good picture for AI. If you go and hit AI on Google, you'll be surprised how many bad things are out there. It's like AI is out to get us. Okay? I mean, it's weapons and it's cyborgs and all those movies, sci-fi movies. It took me about 20 minutes to find a picture which looks like a good picture. Okay.
So it doesn't have any hair.
Yeah, it probably will have some hair, and it probably is going to do
When
a
it
lot
makes
of
money.
Oh yeah, and we think that in the last 5 years, a lot of media attention to this, that AI is coming. AI has always been there. Okay, it's not as if it's something new that has appeared on the face of the planet. It has just got a lot more media attention. And the way it works right now is, and I think it's getting that media attention, is that people are worried that it's out to replace jobs. Okay, and that may very well be true. Have you lately gone to a Walmart?
Some people say it creates jobs.
Yes. So, but the fear is there, and the fear is driving the media attention. Right? In 1800s, the whole industrial revolution came in. Machines started to spin the clothes, and then everybody was like, "Oh my God, what I'm going to do tomorrow?" "Oh, you're going to write code." No, right?
Got to sell the mule.
And there's a new version coming every other day.
Yeah. Yeah, so it's been there, and I fall on the optimist's side in that debate. But the fear exists, the media attention exists. I believe, like any other tool, it's a knife. We can use it, or we can use it to cut vegetables, or do all the other bad things you could. So it's been there, and it's kind of affecting us. It was surprising. Even this morning, when I was coming from my home to here, I used a navigation tool, and I use Waze, by the way, not Google Maps. Okay, Waze. It's right, and the reason I use Waze is it gives me a different route every time I drive from point A to point B. Okay, so it will always take you through different routes, which lets me explore a little bit. But it also helps me avoid all those bad traffic jams and if somebody is stopped on the road and so on and so forth. So, and whenever I don't follow it, I actually make a bad decision. And I actually live through this. So through experience, I in fact have learned personally to trust an AI take me from point A to point B more reliably than my own navigational skills. We already do that. We trust Google to tell us where to buy our next pizza from. Okay. So it's affecting us in more ways than we think, sometimes even subconsciously. Amazon, Netflix, right? Netflix, that's just crazy attack on all our privacies, honestly. Because you log into Netflix for the first time ever and it will have recommendations for you. How do you do that? The only way you do that is because it kind of puts you in a bucket with different other people, and it throws those recommendations to you, and I hate it when those recommendations work. Okay, because that tells me that somebody else, which is just some code sitting in some server, knows more about me than I do. Right, so it's happening. It's been happening. So, and self-driving cars, of course. I think there was a question last time whether it will happen or not. So sure.
And to say it's never going to happen.
Yeah, well, technology will allow that, but whether it happens or not, I don't know. Let's see. 10 years later.
But if all the self-driving cars are going on the road and they crash into each other and there's no car.
They do, yeah. In fact,
What will happen?
they do the other thing. Actually, right now the algorithms are,
Yeah, but my question is a basic one. Doesn't somebody with coherent intelligence have to be able to draw a white line on a road that can be picked up by anything?
Yeah, it's. I think the white line is probably more proverbial white line. It can't be a drawn white line, but it could be some sort of beacon, some communication technology related stuff which you can follow, because you can't follow a line in all weather conditions and so on and so forth. If you can't even see the road, then you can't follow the line. If it's raining or if it's.
So electronically, there must be something put on all the roads so that something else can. I don't want to digress to you.
No, possibly. No, it's definitely feasible. There is no way. I mean, we have gone to moon, right?
If you can't sense it, you can't.
Sensors under the
Yes.
road.
So, and we have gone to moon like 50 years ago, and that was autonomous. Okay. So autonomous technology concepts have existed. Now we have more data, we have better computation. The algorithms have existed always. So technology will never be the bottleneck. So let's talk about this guy. Okay, I found this guy. This was interesting. I was in Japan a couple of weeks ago. This picture I took from a Financial Times article, and it struck me. So this guy, his name is, believe it or not, his name is Mark Wiseman.
Wise man. All right.
So he's wise man. Okay, and I think he has to be wise because he is running the automated trading desk of BlackRock.
Of what?
BlackRock, PSP BlackRock, the guys who are possibly the biggest ETF, yeah. So he runs the automated trading desk. He is in their executive management. I think he is, Financial Times thinks that he's in line to be their next CEO. And he's a Rhodes Scholar, so clearly a bright guy. Okay. And he has also managed Canada's biggest pension fund before this job for most of his earlier life. So this guy, Mr. Wiseman, what is he trying to do? Okay, this is what he's trying to do. I don't know if it's visible very well, but you can look into your PCs or your copies. So this data is Financial Times. What it tells you is over last 5 years, over last 3 years, over last 1 year, what is the percentage of assets managed by AI versus managed by managers, like active fund traders. So it's not looking good for if you are shooting for a fund manager's job 10 years down the line. It's not looking good for you. Okay.
So excuse me, just read the thing. The black lines are
Traditional equity unit, which means there is somebody sitting there doing the research and making the decisions.
and the green is AI.
AI, yeah.
Thank you, sir.
Okay. Okay, and then this is all the quant mutual funds. So since 2010, assets under management, this is billions. So in 2010, about $200 billion of assets were under management of quant funds, which means there is nobody. There is somebody writing code, of course, but the actual trading decisions are taken by an AI. And it looks like almost exponential at some point. And I think we are going into different risks, by the way, don't get me wrong, this is not all good. Because code has bugs. Every software engineer who is here will know that. Code has bugs. If there is a bug, there will be a flash crash. In that scenario, if you have sold your options, my friend, then you may be in a little bit of trouble. The flash crashes will come back up. Yeah, sure.
If you look at the histogram that you got there,
Which one? This one?
yeah,
Okay.
both of them. And if you look at the data prior to 2008,
Okay, I don't have that. I just
No.
copied it from Morgan
Yeah.
Stanley. Okay.
I've looked at the last 20 years.
Okay.
After the debacle we had in 2008 when the buck broke,
Sure.
all the quants were let go. Because the quants took over without understanding, because it's almost like Myron Scholes, Dr. Palmer, when he lost the money with the bond trader from Citi,
Yeah.
he said he was correct, the market was wrong.
Well, that's a bad argument. I think his code was wrong.
Yeah.
That,
What I'm saying is the arrogance gets you the other side.
absolutely. I'm with you on that.
We looked at this because Larry Fink, who runs BlackRock, used to invest with us
Okay.
way back in the early 90s.
Sure.
So on one of the funds we were running, I went back and looked at the data from 2002 to 2010. Those portfolios where people took over the algorithms and said, no, we're going to let a human being run this thing for the next 12 months versus let the computers check it, human beings came out ahead. Because all I'm saying is rationale prevails over automated systems.
Absolutely. And I'm a human, okay, so I'm on the side of humans. So
Can we do a Turing?
But-
Yeah, can we do a Turing test?
But the truism is the market is never wrong.
market is never wrong.
Never wrong.
No, only you are wrong. If you are, philosophy never gives you money. Okay, so you have. I like what you're saying. You have to see. You say something like you have to see the traits. Like you don't have to want them to be good or wish them to be good. I'm sure I'm not getting that right, but the actual grammar of that.
Trade what you see. You
Yes.
trade what you see.
Yes.
Right. You don't listen to people.
You don't trade what you hear.
Yeah.
Because people are usually wrong or don't really know as much as you do. That's true with stock salesmen that they call brokers. We had 2 or 3 of them in our OTA class, and I went through multiple classes. They were the worst students in the room. When they were going to get up and give a sample trade, they had all the wrong reasons. They didn't look at the price charts. It was just
Well,
crazy.
you know, there's a reason they're called brokers.
They make you broke.
Yeah, they broke it.
They're broke.
Because that's how you end up.
They make money either way.
Yeah. So, just to add, yeah, go ahead.
Question for, since 2008 going forward, is it true that the AI capability to learn has increased exponentially since then? Is that also part of
Probably, yeah, sure.
right? To learn from and continue to, it's more sophisticated in learning and correcting going forward. Is that?
We'll hit that a little bit.
Okay.
We have.
Okay.
I'm an engineer too, with a long, you'll know about signal processing, that's my background. But to me, the thing that has made all this go is we've had AI going back 50, 60 years. We haven't had the massive communications, the massive computer storage that's very cheap, big data stuff. And what's happening, in my opinion, and it's just mine, and I'm not as far along as you are in this, is we've got so much data and the processing power to use it that we can actually go do trade-offs until we find things that work.
Yeah,
That's
yeah.
my interpretation.
Yeah, absolutely, and that's definitely important. A guy like me, okay, who's running something, who's running a day job, I think 15 years ago, I won't have the money or resources to actually run something on AWS, to rent a cloud server, which is so cheap right now. Right? That's one part of it. The other part of it is the sources of data have become much more diverse. So would you believe it if I tell you that BlackRock actually rents satellites? And they rent satellites, this equity arm that Mr. Wiseman runs. So they rent satellites, and those satellites actually from 2010 to 2015 have been collecting data on how many cars are hitting a particular store. Now, how do you get that kind of data, right? I mean, you are not even waiting for quarterly results, or you're not, paying a bribe to an executive to get to know what's going to happen in the future. Either of that. What you're doing is perfectly legal, very expensive, and only few people could do that.
How many cars what?
Go to a store.
How many cars go to a store so like, let's say you look at Walmart's, okay, so you pick a random sample of one person in Walmart's over US and just track how many cars are in the parking lot every single day for last 5 years. And then you can correlate it to their financial results. That breaks down for Amazon because no cars is there.
Right.
Not yet.
So the point being that the sources of data are becoming more and more diverse. I'll talk a little bit about that. I talked to you about this, Ron, right? This is not just financial data that is going into Profit Monk. Okay, it's not just price volume and all those 100 other things. It's data, for example, coming from, I don't know if you guys have heard of this, there is a website called Glassdoor.
Oh, yeah.
Right? Okay.
Called what?
Glassdoor.
Oh, yeah.
So there, as an Glassdoor. So as an employee, if you are an employee, you go in there and you kind of see, you kind of review your own company and tell others that, would you recommend somebody else to join the company? How do you rate the working environment? How do you rate the CEO? How do you rate this guy, that guy? And so on and so forth. How do you rate the business? Do you like working there? So you recommend. You won't believe how important that data is and how correlated that data is to the financial success of a company in a slightly longer term, 1 year, 1.5 year time frame. And just like we see these bases being formed in technical charts and so on, you can see those bases being formed in that kind of alternate data. That has never been available before. Twitter feeds. I don't like Twitter feeds so much because I have never been able to correlate with them till now.
One of the highest ranked companies in that was Enron. Just
before the flip. So I guess that always stays true. So you make all these intelligent, I would say, guesses, and then you wear a humble hat and say, I might be wrong here. Okay, and that's the whole concept of Profit Monk, because I personally never ever, even if you come and tell me this is 110% winner, I'll not put more than $1,000 on it.
When you find a time, we need to take a break. People are...
Okay, so I think this is the...
Keep going, please.
Keep going?
Yeah, why not?
Well, how many need a break? I noticed some people leaving, and they'll be back. but they probably needed a
Let's get
break.
into the meat of this.
Okay.
Please.
So let's go to the web page. Okay, so we will talk about, let's go to the tool. And let me see if oh, okay, I have to go there. So I have to really see here. So this is the web page. Okay, so let's go through this. It's more of okay. I really apologize for people who are in the back of the room, but I suggest that you can open the page in your PC or phone if you can't view
This
it.
is very easy. Very easy.
Okay.
Very easy. Thank you.
So you get in here, okay, and let me try and make this font a little bit bigger.
Do you want to back up the projector?
That's good.
Is that okay?
That's fine.
Okay. So when you log in, and I have to fix this page, I have not fixed this page. When you log in, you come to the welcome page, okay, and welcome page is nothing but somewhere common for you to park. But all the information is here in the strategic information page. So every line in this list is a different algorithm.
Different what?
Different algorithm.
Algorithm.
Yes, yes. It's a different strategy, it's a different algorithm. What's that?
Would you say defensive?
Different.
Algorithm.
Algorithm. So it is a different algorithm. So it is, think of it as a different mathematical equation to find out what are the trades which have a bull bias, which are going to go up. And you can look at it from 10 different, or actually million different angles. Right now you see 10 different equations giving you 10 different algorithms. So that's the stage one. Let's hit one of those algorithms and we will discuss what those algorithms do, how they work, etc. So you go to a page, and I think I should make it slightly bigger again.
Do each of those result in a different set of data?
Yes,
Okay.
yes, and you'll see that.
Ash, are these locked down so that we cannot change these?
You as a user can do something about it, and I'll talk about that in a moment.
Thank you.
So when you hit an algorithm page, you come here and you see some data. The first piece of data is, oops, no, I shouldn't do that. So key statistics for most recent 1,333 trades. So what's the magic here? Okay, why 1,333?
Highlighting grays it out.
So I shouldn't highlight that. I should just, okay. So 1,333 trades. Thanks for that, Sanjay. These are all the trades that this particular algorithm has suggested since 1st January 2017. I took an arbitrary start point. I could go all the way back. But I took 1st January 2017 for two reasons. Number one, 2017 was a good year for stock market. It just kept going up. Okay, 2018 is, it's oscillating around the median. So it gives you a good reference. It gives me a good reference of how trades are doing. So these are all 1,333 trades. For this strategy, it will keep changing if you click a different button in this list. So
Here, just
thanks.
push that button right there.
This guy? Okay. So, okay. Then the second thing is, what is the average USD per trade that you make? 162. How is that number coming through? We'll see in a moment. But one assumption needs to be clarified. For all of these 1,300 trades, to make an average profit of $162 per trade, the big assumption is that you are putting in at most $1,000, not more, okay, not less. And that's important because let's say there is an option which is priced at $1.50, okay, a call option which is priced at $1.50. So you have to pay a premium of $150 to buy one call contract. if you cap your investment in every trade to $1,000, it'll tell you that you should only buy 6 contracts, cap at 900. Because if you buy one more, you go above 1,000. Okay? So that's the cap. With that cap, you make 162 expected gains.
Is that number based on portfolio size, or where did you come up with?
Which number?
$1,000.
Okay, so this is based on how much risk I wanted to take.
Is that a percentage of your portfolio size?
Yes, and we will talk about that. Yes. How do you come up with that number if your portfolio is size X? And we'll talk a lot about that towards the second half of this meeting. How do you decide how much to invest in every trade? Then the third thing on the line is what's the win ratio? Okay, so win ratio is 68%. What does this mean? That means that out of these 1,300 trades, 901, and I'm sure you cannot see this number, but trust me, this is 901.
901.
There, the next number is more important. 877 trades made more than 50%. So what does this mean? Out of these 901 trades, 877, which is almost all of them, gave you at least 50% of gains. So if you invested $100, you came out with 150 minimum.
Well, your losers must have been awfully big then.
I'm sorry, what's that?
I would assume from what those statistics that your losers have been pretty big.
Yeah, and we will talk about that.
Okay.
How to decide when to sell and what's the stop loss. Right, and we'll talk about that in a moment.
Wait, but if this is a short-term trade, don't we pay capital gains tax on the profit?
Yes, you do. Yes, you do.
That's a good problem to have.
Yeah.
Don't let the tax dogs wag your investment.
But I mean, I'm just saying that this $162 would be a lot lower in this case.
It's greater than
It
zero
is, yeah.
to start with. After paying taxes, it's still greater than zero. That's one. But I think one part of your question makes a lot of sense, which is, to me, what is the length of investment? What is the how long is this call? So this is because this is important, and I think that question is somewhere hidden behind what you asked. So I'm looking at calls which are slightly out of the money, okay, and they are between 115 to 180 days out in expiry.
6 months.
Maximum. Yes. Minimum 4, maximum 6. So yeah, if you do win, you do pay capital gains taxes. So let's go down a little bit on this page.
So question, Ash.
Yeah?
I mean, this strategy, why is the performance is not better? Because if you put $1,000, you're only getting 16%. And
let's look through that. Let's look at how this thing works out over those 1,000 trades.
yeah,
And
I mean, you might have other strategies that perform better, but this one is only 16% return on your $1,000.
So there are a couple of things. I think there is some math which is a little bit missing here in your submission. Number one, you are making 16% on every trade, not over 1 year.
But on average, I'm just saying, like, you're investing $1,000 on each.
Number two, and we will see that in a moment, at some point of time when you get on house money, what you do with it is the question. And we'll see how all those 1,000 trades perform. So the third thing is, never invest all your money in one strategy. It doesn't matter if Mr. God comes in here. Please don't. Okay, because almost always, if somebody is telling us that he knows everything about everything that's happening in the financial world.
Who's this?
Yeah, that's the question. So, let's turn this into dollars a little bit. So, all these 900 trades that you won, you make $526,000, which is this graph. And all those 400 trades that you lost on, you lost $311,000. So whatever is the difference is what you came up ahead by over last 1.5 years. Now this comes to this graph, which is probably your question. Wait, so this is profits made over time using all these 1,000 trades, using this strategy. Again, you have to trust me on this. This is 1st January 2017. If you log into the web page, you can see it. But the chart starts on 1st January of 2017. That's where the first trade was made for the strategy. Y-axis is US dollar profit, total profit.
Is that just your portfolio value that you're charting? That doesn't have much drawdown across the whole thing.
It's just profit, and I'll explain in a moment where the drawdown comes from. So it's just profit right here.
Okay.
And I had to make a decision while drawing this chart, and that decision was like this: if I make a trade on January 3rd, and if that trade makes me money on March 3rd, should I show that as profit on March 3rd or profit on Jan 3rd? Right? Because that tells you what's your maximum investment into going into any strategy. And then I realized it's not even a decision for me, it's just that I should make both of those graphs available to people. Because I like this better. Once you are on house money, which means that you have made all the money and then you are just running on that, you are only looking at profits on that baseline. So this is not portfolio. This is just profits. Realized gains. Okay?
House money means like your own money, right?
No, house money would mean that, let's say you start with $15,000 of portfolio. At some point of time, you would have made $15,000. Right? You are at $30,000. When you don't have to put money from your own bank to make the next trade, you are using the money that you generated out of these trades to reinvest. That's what the house money is. I'm sorry, it's a gambling parlance. Clearly, you are not much of a gambler.
No.
Sorry about that. Sorry.
Self-sustained.
Yes.
So you pull your own money out. If you put in 15, once you make 30 or 40, and then you pull your 15 out, then the rest of it is house money?
You can do it, yes, that's that, you can do that. But you put in 15, and it's giving you trades, and then you're making your trades on the basis of the profits that you have generated out of the other 15. You're not getting money out of your bank into this account.
Your money's making money, you're not adding any additional funds.
So that's what it means. So this chart, to answer your question, this chart, if I made a profit on January on a trade that I bought on January 3rd, is still showing profit on January 3rd. This particular chart.
You're saying you don't count it until you actually take
That's the second chart. So there is another chart because
it's gone. Once you put it, it's gone.
Right, because different people, once they are on house money, they find this chart more useful. Okay, because that's a different thing. Or you just use Robinhood or your portfolio account. Once you are starting, I think you find the other chart more useful, where it goes down and tells you what's the maximum you had to invest to get to a certain point. Right, and as for the drawdowns, this is where the year ended, January 2018. This is when it ended, and as I said, it was a good year. So you made about 180K in last year, and on this strategy it went down to whatever it went down to, and it has gone up, and I think it's 215. So you have not made a lot of money in last 8 months on this strategy, right? You have made from 180, which is 1st January of 2018, or 185 actually, that's the maximum you went in 2017. It's here.
What was the starting money?
Zero. Profits are zero. When you start, your profits are zero. This is a profit graph. This is not a portfolio graph. How much you have to invest to get to this profit, we'll talk about that. Okay? And that number, by the way, is roughly about 25K. So you start with 25 because...
In 2 years?
No, right here. So you put your 25K, 30K here.
Right.
And by about middle of February, you can see your profits are exceeding that.
But that whole timeline is 2 years?
That whole line is 1st January 2017 to middle of February, 13th February 2017. This whole timeline is 2 years.
Okay, so 25K in 2 years got you 200 something.
Right, for this time.
Ash, I was expecting to see huge drawdown toward the end of January last year.
Yes.
February last year.
Well, you see the dip in the profit.
And you will see that more for some strategies. I just picked the first one.
But this is not net profits, right? This is just.
Yeah,
If
because
you-
everybody's taxes are different.
You'll never see a
Oh, no, this one
drawdown.
either.
It'll always go up because it's only showing profits, right? Is that correct?
I just want to, just give me one moment. So to your question, if you go through these strategies, I think Swing Plus and these guys which are more aligned with how market is moving, you see big drawdowns. Like drawdowns up to 25-30%. So market went down by 8%, 7%, it's not in crash really. So, but the drawdowns are bigger. Way bigger.
I have another comment on your website.
Okay.
When you try to use this, all these names, they are confusing. And you don't know which one to
Which
use.
one is
You
which?
don't
If
know
you're a
what-
beginner,
It would
yeah.
be nice to have somewhere document what each one
Each
does
strategy.
at a high level.
Okay.
Especially for beginners.
Because, they are all names.
Or use terms like easy
You don't
money.
need-
Easy money. I like that, man. I should. I should get those names from you.
Hard sell.
I think on some of them, I think the key point is, I guess, this follows the general market, this follows, this is more defensive, this is more aggressive, and it follows these types of,
Descriptions,
Yeah,
yeah.
some description of.
Yep, I'm with you on that. So I still have to do that. If you guys can suggest some names, I'm all ears. Okay, clearly I'm not very good at this.
How long you had
You're
this?
wonderful.
How long you had this for? This site?
This site has been there for about 2.5 years. I just started. I have been using it for my own thing because I wanted to ensure that I'm able to use it. And then my friends and my friends' friends and so on.
Hey, we haven't told anyone what the cost is. It's free.
What's that?
We haven't told them what the cost is.
Yeah.
To run the site?
No.
For anybody to join.
Yeah, I haven't told them. That's the secret, right?
You should, they'll be more interested in it.
So we'll go there. I thought there was a question here about profits. Yes.
So, is it correct that for the graph that you're showing below, is it correct that you would not see a drawdown on this graph because it's profits only? So as long as...
No, that's actually not true.
Okay.
Because your profits go down as well. You see, because it's not only the realized profits. If you just look at realized profits, that always goes down.
This is net profit. Yeah, this is net.
This is net, so
Because
it does go down.
Yeah, because if you look at your January, it hit a peak, then it dips because you got some drawdowns that you're looking at profit, right?
Right.
And this drawdown, I think, is about 10%, but there are some strategies where the drawdown is much more. So this is 180, 170, okay, 6-7%. But there are some strategies where it goes down by 20. I know those.
So that's percent profit. If you just added one to it, it'd be your portfolio value, right?
Yeah, you could, and I just need to do some coding because everybody starts. So you might want to start with a 50K portfolio, starting money. I might want to start with 20. Somebody else might want to start with borrowed money or whatever. But so that thing needs to be configurable for the user, I believe, so that you can track your portfolio. And it's not yet there. Just like bad naming, this is another example of bad user experience on the web page. My focus in last 1.5 years has been more on algorithm side.
Yeah.
And now, hopefully, with all this good feedback, we can make it a better user experience as well. Okay, so we are here, and so now, what do you get as an? Okay, let's make it slightly more bigger. So, this is what you receive every day. So let's look at this table, and then probably we should go for a break after understanding this table. Okay, because then we will go into a more macro level discussion on how to use these strategies together as a whole and so on. So the headline option trading ideas from, okay, so this is the only place where I used an adjective here, spectacular. Okay. Sorry for that. But okay, so for this algorithm, let's say on September 29th, which was yesterday, what's the state?
What's today?
Is that today? Okay. So, so buy 3. So this is what came up yesterday. It said buy 3 call contracts for this ticker, WBA. What's that? This is
Walgreens Boots.
Okay, Walgreens Boots. Okay. At this strike, 75. The target buy is about 280. The total investment is 843 again because the limit is 1,000, so that's why I'm limiting it there. The expiry target is basically it's a contract, January 18, 2019 contract. So this is where you get the information on your buy side. Then the next column has information on when this particular idea came up on the website. When did the AI find it? So that was yesterday, September 28th. What's the option symbol? This may be useful if you're looking at Fidelity or something, because sometimes they give you these symbols and that's the only way you can trade. I trade on Robinhood. Lots of my other subscribers trade on Robinhood for different reasons. One of them being it's free. And you don't have to worry about the ticker symbols, but sure, some people find this useful, not everybody will find the ticker symbol useful. And the way to decode it is, it's a 75 contract, 18th January 2019. Let's move on. So the underlying stock price when this thing came up is 70 to 90, which is probably the close price of yesterday. What's the target sell price? 422. That's the target sell price for this option. And target stop loss. So we will go into how to change these numbers and what should drive your decision to change those numbers. Okay, and what's the trade-off in each of those. But let's first understand what they are.
Are you putting in limit orders on those, on the 422?
What's that?
Are you putting in a limit, a buy limit?
Stop loss.
To buy?
Or sell.
No.
Sell.
No. I only try to buy it at less than this price, 281. 422 is the target sell price.
But you're putting a limit on the 281.
Yes, so I do that, 281 or less. I never put a limit on sell, and it will become clear in a moment why.
You do that manually?
I wait for it because stocks gap up, and we make most of our money when the stocks gap up big time. And if you have a limit order, it goes out the moment it hits 50%.
Yeah.
And you will see, even though the target is 50, in this page you have a bunch of those which is 120%, 200%, and so on and so forth. That happens when stock gaps up. You may put a limit order on stop loss though. I don't, but you may want to.
But you probably have alerts.
What's that?
You have alerts.
Alerts, yeah.
Otherwise you got to watch it.
So it's going back to the 10-minute principle.
Yeah, I was going to say, you don't have the time.
So you got to watch it. Can you watch it in 10 minutes? That limits the number of trades I can make.
You can't put it on a trailing, can you? Does it have the ability to put a trailing stop?
You don't have the ability to put a trailing stop in Robinhood. You can't do that.
Okay.
So not yet. It's free.
So that way you could ride the gap up, and then when it reverses, you're out.
Yes, that's possible. That is not there on Robinhood. Does it exist on Ameritrade and all these?
Cost you to do it.
Cool. So then, I don't think you should worry about those $4 or $5 that you pay buying a thing or selling it. The premium is there for a reason, and you can use the tools that are available on the platform, and the free guys don't give you those tools. I use Robinhood for a totally different reason, not because it's free, but because I'm more of a mobile guy and I'm traveling a lot. I don't use my computer screen to trade. So the interface on Robinhood, I find it much more intuitive to just go through it in 10 minutes and realize where is every trade. But I think that's not even important. It's your decision.
You may address this, because it depends on where people with their stop losses, right? How are you for the profits? Is it based on your actual trades, or is it based on? How are you finding when you sell for a loss, right?
Okay, so I think we will have a longer discussion on stop losses. So just hold on to that thought for a bit.
I might have missed this, but the date of the idea, September 28th. When does this show up? First thing in the morning, or
I think you should imagine first thing in the morning. It shows up at about 10:30 in the night.
The night before?
Yes.
So the 27th at 10:30 is when this will show up. About?
No, 28th. So this is for trading on Monday.
Okay, this is for your Monday trade.
Yes, this is for trading on Monday. For Tuesday, it will be Monday night.
Okay.
So then the status of the trade. So right now this trade has not been made actually because this has just come on. So it it will basically follow what is the profit made in this particular trade and also convert it to dollars, which is probably not important, but I think I read dollars better than percentage if you are reading too much of those. And then it also captures the final result, which is maximum gain achieved in this trade till date, which is 0% again for this one, and what is the contract price when this trade closed. So any questions on this, and then we can go a little bit deeper into this list.
What does the green arrow mean?
So the green arrow will mean that this particular trade has been doing well, is up, is going up. So these trades are going down, this trade is up, down, 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 up. So if you're just looking like a quick view, it tells you, it doesn't tell you how much up or how much down. If it's up, it's green. Even if it's like 0.5% up, it's green.
On your web page I'm looking at right now, mine doesn't match yours.
Yes, it does not. And I'll show you how to match this to that or that to that in a moment. So,
Ash, one question. Is there any way you can show current price of it? Are you showing current price of that option?
Yes. So we'll go there. Yes. So let's pick something which was few days ago. Let's pick randomly. Okay, Exxon. So this one, because this will tell you all that information. So this information came on September 14th for Exxon, and it said you should buy at 209 and you should sell if it goes beyond 314, and it says that on September 24th, which is a couple of days ago, the profit in the target was 82%, you sold it, you closed it. Okay. So how did that go? So you can click this link here. So you click this. Cool. So you go to this page. Okay, and then it tells you day by day how your option is moving. So this is where you bought it. Again, I apologize for this mess up. I have not found time to fix this because buy date is actually overlapping the first price always. But this is 281. No, this is not 281. Somewhere else. Oh no, this was 209. Okay, we moved to a different trade. So this is 209. And then this is dates from 14th to 28th, and your sell target was met here, which is 24th, and it is about 370-ish, and then it is going down actually since then.
That was perfect.
So you get that, and you also have this in a table. So if you are a coding wizard, you can download the table and do your own math.
So is there any way you can add the current price on the original page?
Yeah, it's there actually. So if you go current price of the option. Okay.
Is there any way if you can add it, that would be like the easiest for everybody to track?
Interesting. So it's I think it's this. You see this?
That's today's. Okay.
Yeah, that's today's 281. I think it's this. It's probably not very intuitively placed because you're the first person who's telling me that it's useful.
That's very useful.
So now because
if you have like if somebody's following all your trades, they can just say, okay, I'm getting out here, you know.
So this is 281.
Yeah.
Right now in the graph. So it's available on the page as well.
Okay. Awesome.
Okay.
Can you set up a closing option automatically for you or do you have to close it yourself?
I would suggest you close it yourself. You can place a limit order, but statistics tells me that if you place a limit order, actually this one is a good example. So the profit, so when you are $3.14, that's what this is. That was the sell target from AI. So if you are buying it, you will put your sell target limit sell order at that point. But look where you sold it. You sold it at 380. Why did that happen? Because for whatever reason, this particular ticker gapped up and then you made more money. So I think the most valuable thing in my life is, probably everybody else's life, is time. That's the only resource we lose every single moment. And that's where it does make sense, and to actually put that little bit of time every day on your trades, especially in these strategies, rather than fire and forget, because you make much more money that way. And if you can't, then I'll have to think about how to do that thing, because I'm assuming that you are closing your trades yourself.
Like if you're traveling and everything, it's easy.
If I'm traveling, I don't sleep. Almost. So, but I'm with you on that. So if you're traveling, you might make some wrong decisions sometimes. But let's take a step back and look at the bigger picture. I have made huge mistakes in this, okay, like on my own trades. To the moment I have made, to the extent that I have made fat finger mistakes. Okay, so I'm trading on Robinhood, and this thing is really bad when you try to enter a limit price. So you have to enter the decimal yourself. Nothing about that. So if I want to buy something at $2.10, I have to type 2.1. If I forget that point, it's 21.
Oh.
And I have made those mistakes. Okay? And if it's 21, I don't think you get it at 21, but you get it at wherever it is. So it's not huge. But the idea is that the strategy, whatever strategy you use, has to be robust against mistakes you make. Okay, that's the key thing. There should not be a catastrophic mistake. It doesn't matter. Wrong price, wrong buy, wrong sell, forget the trades. No. And that's one of the key tenets, the key principles of managing your risk. Okay. Sorry about that long winding explanation, but I think it's good time for a break.
Okay.